So, thank you all for being here. And as Marianne mentioned, I totally apologize that Louise was under the weather, and we actually tried to get a backup, but I'm sure you can all attest to how many lawyers are going to come out the day before when you're calling them. So basically Louise wanted to share with you some of the most important details, and there's other information she would have loved to have shared, so of course feel free to email her. So I want to talk to everybody about how do you decide if you should keep the home. I know how a lot of people decide if they should keep the home. It's an emotional thing for most people. I would say especially most women. It becomes an emotional decision. That, I think you can probably agree that most decisions you make in life, any big purchase should probably not be made with emotion. Should be made based on dollars and cents. But, we're going through separation and divorce, and we're emotional, and we're not doing very well, and so at a time when you should probably not be making any major decisions, divorce pretty much demands that you make major decisions, keeping the house being one of them. Okay, so in divorce, of course, the matrimonial home is often a couple's largest asset and is often at the center of separation and divorce negotiations. So you probably don't need me to tell you that there are pretty much three options in trying to decide what to do with the matrimonial home. You yourself can keep the home, your ex-spouse can keep the home, or you can sell the home. It's probably not really rocket science. But what I want to do is share with you what all three of those look like. And of course, for each one of you in the room, it's going to be different. You have different other assets and liabilities. And so I'm going to sort of go through some, what I think are fairly straightforward calculations. At the end, please feel free, to ask me if you have any questions, to help you go through, what to do in the event you're trying to decide. So, okay. So, most of you probably know that in Alberta, with a very few exceptions, the expectation is that two spouses will equally divide the value of their total property. So in the most, we talked about the most simplest of explanations and what the options are. So let's firstly discuss paying out your spouse. Okay? And I'm going to make it very simple, because otherwise we would be way too long. And I have to keep to the clock. So let's make it really simple. If the house is your only major asset, so everything you have is pretty minor, and even if it's part of additional property that you own, you have the option of paying out, or as some people refer to it, buy out your spouse. So the consideration from a numbers point of view is as follows, and I just want to make sure you can all sort of see this. So let's say you purchased the home while you were together, at some point during your marriage, and today's market value is $500,000. Now, I often get asked the question, how do we come up with the value of a home? So here's what I usually suggest. My preference, first choice, I happen to have a very good one in the room today, is to ask a realtor. Okay? If you want a price on anything else, you're going to ask the people who are in the industry. And so that's the easiest thing to do, and in my opinion, gets you what should be an expert opinion. Now I know, I always get reactions, well, they always have their motives, if they think I'm going to sell or not going to sell, or etc. It's like everything else. You got to assume that most professionals have integrity. So if you're worried, ask more than one. But realistically, when I have clients get more than one opinion, to be honest, they're usually within $10,000 to $15,000. I don't often have people getting more than one CMA, or comparative market analysis, as they call them. that are really too far apart. So that, in my world, is the easiest. So now, of course, that has to be, in a more civil negotiation, okay? So let's say it's not civil, okay? Then people want to run and ask a certified appraiser, okay? So these are people that are certified to appraise homes, okay? So you can do that. It costs you $350 or $400, but it isn't an exact science. It's still based on, if someone came to the door and wanted to buy your house, what would they give you? Well, you don't know unless you're selling, and the right person comes along. So you can ask an appraiser, but I can tell you I've had people where the wife has asked one and the husband's asked one, and they've been further apart than realtors. So now you've spent $800, and nobody likes the other person's appraisal. So now we've thrown $800 in the garbage. And now, having said that, if you, God forbid, end up going to court, the courts have no choice. So they'll order an appraisal, and usually you have to live by it. So if you're going to spend money on an appraisal, there's lots of them, just like any other profession, there's good ones and bad ones. Pick somebody, live by whatever it is that they say. So those are sort of, how do you come up with what's fair for the house? There's the city assessments. Every year those are sort of all over the map in terms of how do they compare to market value. I have some people who use them. Just kind of depends on the spirit of your negotiations. So, okay, so you have a $500,000 house, and you have no mortgage. You're very lucky. So, you have nothing else. Let's go to the wife. Wife wants to keep the house. So, the wife is worth $500,000, and the husband has $0 in assets. So the wife, of course. So you always, when you're totaling up your property, now, this is not a session on tax implications, so there are lots of tax implications that apply to other assets that you need to consider, that apply to, I don't think it's for me, that apply to other physical property, rentals and things, but for these purposes, we're not getting into that. So you've added everything up, no matter what you have, you add everything up. You always have to pay the other person half the difference. So the difference here is $500,000 in what wife has and husband has. So wife has to pay $250,000. So now everybody's worth $250,000. Okay? So now, unless you have a family member stepping forward, or you win the lottery, most people have to then try and secure debt, potentially a mortgage, against the home that they're keeping in order to pay this. Okay? And Joyce is going to talk to you all about that. But that is, so a lot of people make an agreement, I'm keeping the house, yeah, I'm going to go get a mortgage. They sign away, and then they go see, probably not Joyce, because I'm sure she always says yes, but they go see a lender, and sometimes the lender says forget it, for whatever the reason is. And then you have something in an agreement that no longer applies. So the thing I always tell my clients is, do your homework, confirm that everything you're taking, you can actually take, and then sign your agreement. Okay? So, because this is what would have to happen. Now, let's say you presently have a line of credit or a mortgage on the home. This is where sometimes people get confused. So the wife's still going to take the house. Okay? And I'm not going to get into a whole explanation, but what you need to understand is, as long as you've agreed that you're splitting everything equally, doesn't matter who takes what. As long as you add it all up in both columns and someone pays the other one half the difference, you've gotten half of everything. You might not physically be taking it. Okay, and that's a whole exercise that I go through with my clients. But let's say you have a $500,000 house. You have a $150,000 mortgage. Okay? Almost always the debt has to go with the house, right? He's not gonna, if he takes the debt, you're just gonna owe him more money. So in the end, you're gonna have the same amount of debt. Anyway, if you have a house, you have a mortgage, You're not worth 500 anymore. You're worth 350. The husband's still not taking anything. So now you don't pay him 250 because you're only paying based on the value of the asset you're taking. So the value is 350. So in this scenario, you got to pay 175. Okay, so that you can each be worth 175. Now, here's where people get a little confused. When you go see someone like Joyce, you can't tell her I need 175. You need 150, because you got to take what's there today, and you need 175. So now you got a $500,000 house, and you need $325,000. Okay? So that's, for whatever reason, a step that sometimes people miss. And they go and talk to a lender, and then they come and see me, and I said, okay, well, you need this much, I do. Yeah, you got to take this, because it's attached to the house. And you're getting credit for having to take a debt, because now you don't have a $500,000 asset, you have a $350,000 asset. Okay? So that's a big owie for someone who, they don't have a job, they don't know what, they're going to get support, but potentially, maybe it's not enough to qualify. So that's a big issue. And I guess the important thing that I wanted to share with you today is there's tons of creative ways you can enable someone to keep a house, but you got to be civil and you don't have to like each other, but you've got to want to cooperate, right? If you don't want to cooperate, then your options are pretty much limited to what I'm going to talk about today. Okay, so that's basically how it works when you got to pay out your spouse. It's pretty straightforward. So, second thing I want to talk about is secondly, you can give up other property. Okay? So, giving up other property is only an option if you have other property. Okay? So if you only have a house and you have no other property, obviously that's not an option. So for example, many couples have pensions, RSPs, investments, other physical property, bank accounts with significant cash. If that's the case, you have the option, if your spouse will accept the proposal, to take the house and have your spouse take other property of equal value instead. So let's revisit our same example. Your home is valued at $500,000. You have no mortgage, but you have a GIC or a savings account, wouldn't that be nice, valued at $500,000. So I've chosen this example over others just mentioned so we don't have to, as I mentioned earlier, delve into possible tax implications and things. So you could choose to keep the home with no mortgage, so you got a $500,000 asset, and give the bank account to your spouse. So now you're each worth $500,000, and everybody's happy. But you can't have some of the cash. Because if you take some of his 500, you're just going to have to pay him back. So 6 of one, half dozen of another. Okay, so that's one way to do it. Now, if you have the same mortgage as previously mentioned of $150,000, and you choose to keep the home, so again, and gentlemen, I'm not picking on you, it's 80% of the time, women try and keep the house, so I'm just using the usual example. So then you have, whoops, that wasn't right. Okay, so then you have your $350,000 asset. So then, the husband still says, well, I want to keep the bank account. So basically, you say to him, well, hey, I'm going to do it like this just in case people aren't that great with numbers. But obviously, you could say, you take $350 of that account, we'll split the other $150. But I'm just showing you, you're going to add it up in columns. This is how what they call equalization works. So he says, you have the house with that $150 mortgage. I'm taking the account. Great. Then you say, well, the difference is $150. So you got to give me $75. So we both got to be worth $425. So now, when you go to Joyce, you can say, hey, I don't need $150 because I just got $75 in cash, so I only need a $75,000 mortgage. And Joyce says you can't have $75,000 on $500, and come talk to me and I'll have to call Joyce. But it's obviously a lot easier. But that's like the scenario where you have the assets to work with. So basically, you know, an important thing you need to know, and someone's actually asking you to do a lunch and learn on that, is that how does equalization of matrimonial property work? But for our purposes, basically, all you're doing is you're listing all your property. If you're worth 800, you both have to be worth 400. If someone takes all 800, you got to give the other person 400 somewhere. Nobody cares where you get it from. But all the lawyers care about is you're each walking away equal, unless of course you agree to do otherwise, but that's not very common. Okay? So that's basically equalizing it with other property. And the last one, which I've done a couple times with people lately, I just did for one of my clients going to court. It's a horrible thing. Don't go to court if you don't have to. Accepting spousal support in lieu of paying someone out for the house. So, whether your house is your only property or just part of your matrimonial property pie, lump sum spousal support in lieu of buying your spouse out of the home can sometimes be an option. In cases where you both agree that there will be or should be payment of spousal support, a lump sum support amount can be calculated. I do it for some of my clients' lawyers all the time. The method of calculating and determining is complicated, and so again, for these purposes, I'm not going to get into a whole explanation on how you do that. But in the case of keeping the $500,000 home, with the $150,000 mortgage, then you have, and let's say the husband says $350,000, you own $175,000. If it's agreed that spousal support equates to a lump sum support payment close to or of that amount, then instead of owing your spouse, as previously we discussed, half of the $350,000 equity, you would now owe okay, so basically what you're going to do is, you have the $350,000 house, he has $0, you got to pay him $175,000. So someone says, well, let's calculate what spousal support should be, and we calculate it, and it's coincidentally, it's $175,000. You say, thank you very much, we're done with spousal support, I don't owe you this. Now when you go see the lender, you only need the $150,000. You've erased this. But the issue I want to caution you about, because I have women ask me this all the time, if you accept a sizable lump sum spousal support amount in lieu of paying your husband out of the house, or your wife sometimes, you don't have monthly spousal support. So if you're not working, let's say you have kids, you have child support, if you're not working, you're not going to be living off child support regardless of how much you're getting. So that's a huge consideration that sometimes people overlook is, oh, well, everyone says you can do a lump sum thing. Yeah, you can. But you need to realize you may not have a monthly support payment coming your way in that case. So, and just sort of a note, I have some clients who sat down to work things out, and they've decided, because they cooperate again, you know what, we want you to stay in the house, usually in the case where there's smaller children. That's spousal support, thank you very much. They don't even calculate it. And you can do that if you are cooperative. Failing that, you know, and I do it for some of the lawyers all the time, you have to do a calculation for spousal support and then figure out what an appropriate lump sum is. So that's how that scenario often works. You can also do it if you're looking at doing a lump sum. You can do half and half. So I worked with a gal the other day, and she needs some income until she's back working full time. But her lender said, and this is a really good time to help you understand. You know, a lot of people go to their lenders, whether it's a bank or a broker, and a lot of people are told, I don't want to talk to you until you have your legal agreement. Well, it's a little late, but when you have your agreement signed. So I've said to Joyce, you know what, if I send people to you, can you sit down with them and hypothetically look at, if I'm going to keep this house, how much can I get? What will my monthly payment look, assuming this is potentially my support, etc. And so she's, you know, gracious enough to want to do that, but not all lenders, just so you know, will do that. But that's a great exercise to go through if lump sum support is an option before you make that decision. Because if someone, a broker says you can't get $325, then if you're not getting a lump sum as part of this, you can't keep the house. So those are three of the ways you can try and keep the house yourself. Okay? So, and of course, if your spouse is looking at keeping the house, it's the same mathematical process. So the other thing I wanted to convey to you is figuring out if you can keep the house is about numbers. One of the investment advisors that I work with, and the host of the More Than Money show, Faisal Carmeli, has the best line: divorce the house before the spouse. And it's a great line, you know. And someone said to me, "Well, that's easy. He's a guy, you know, and he's never been divorced." But truthfully, that's a great line to do your best to adhere to, which is, you know, and men are much better at this than women. Men, you know, I always tell guys, men can, for the most part, take the emotions and put them in the little drawer over here, and then look at the numbers. Women, they get the whole emotional thing looking at the numbers, right? And then they can't focus, etc. And that's okay. Women are women, men are men. But when you're going through something like this, you've got to keep the emotion out of it. Okay? And I'm not telling you this because I haven't been there. I've been there. I kept my house. And I think any of you who have come to see me as clients, I've probably told it was a dumb decision. But my kids were 6 and 9 when we went through it, and I was keeping the house come hell or high water. And it was a decision which, for us, was affordable for me. But I did it because I can't take my kids out of the house. And I'm not, you know, as most of you probably know, I'm not a very emotional person. I don't, you know, most people say, you know, you think like a guy. But, you know, when you're going through divorce, you're not like thinking so clearly. I was keeping the house come hell or high water, as a lot of women say. I was only, you know, working sort of part-time. My kids were young. I'm keeping it for the house, for the kids. Don't even want to discuss it. Well, you know, as I've told some of you, houses, they're like money pits. So, you know, the one thing you need to make sure is that you've taken that into account. It's just not a matter of this. Now you need to look at, can you afford it every month? So when I sit down with people, you know, if they're not already, haven't already taken themselves through the exercise, you need to look at, can I afford it? Which is why, you know, you need to talk to a lender. What's it going to cost me? Well, if it's costing you 3/4 of the income that's coming in, it's not a good decision. Although I've had people do it anyway. So, and even if you say, if someone says to you, you know, it's way too big a percent of your income, you know, at least if you do it anyway, right? We all make emotional purchase decisions, even though and I talked about this at our last lunch and learn, even though our logic says you shouldn't be doing that, our emotions sort of overtake us. And so, but at least if you do it, you're going into it well-educated, empowered, with the knowledge that you need. So at least when you know, make a decision you should have, you can look back and say, as I do, well, that was a dumb decision. You know? But, and then if you're going to do that, and some people when they're making this decision aren't really sure, you know, what they should do, right? Some people, you know, are a little bit more hesitant to spend a certain percent of their income. Some people are a little bit more liberal. If you're not sure, just don't lock yourself into something long-term. And if a year from now it's strangling you financially, you can always sell the house. That's the thing. People always think they're making the decision like it's a forever thing. You can always sell the house. It's, you know, not as big a deal. Just don't get locked into an arrangement where in a year from now you'll have this humongous mortgage penalty, right? Because the interest rates have gone down. So, so basically, you know, what I always say to people is, deciding to keep the house, I mean, first of all, it's just one decision in the whole scheme of things, but it's a big decision. it's not just I want to stay here, right? Because my kids need to stay here. You know, and just for a lot of you, you know, you keep a house, the roof goes, you know, the driveway needs to be replaced, then all the appliances start to go, and the furnace, you know, and all those kind of things. And then your house isn't where your kids hang out anyway. So, I don't know, I'm still trying to figure it out. Last one's leaving, and then I'm selling my house. So, so basically, as you can see, creativity and flexibility go a long way in determining whether you should keep the home. And I wanted to conclude by imparting to you some additional wisdom, as I already mentioned, with the benefit of hindsight. Of course, retaining the home is not simply a financial decision. It would be much easier if it were. We all remember to consider the effect on our children, but please remember to contemplate the following as well. Would you be better off moving forward in a home where you can create new memories, or can you live with the old ones? If you stay, will you be left with 25 years of stuff to deal with on your own? Because I guarantee you the other person's not coming back to help you clean. Do you have the time and energy to maintain a home on your own? You're laughing. Well, it's true. Actually, that's not true. I know one guy who actually did, but most people don't. And lastly, you know, can you actually afford and qualify for the monthly cost that you'll be burdened with? And then, of course, the other thing I always tell people is, if one of your strategies is, you know, depending on your kids, your teenagers, to kick in and help with the shoveling and the grass cutting and the cleaning, like, hello, that's a pipe dream. But it's funny how when they move out and they're in their own place, as my son is, they clean, they do laundry, they cook. It's like, hello, you know. So, I was trying to inject a little bit of humor in what's always a really stressful decision. So I just wanted to share with you some of what should be, and it should not be a decision you make in 5 minutes. And if you have a lawyer pressuring you, I just talked about this with somebody this morning. If you have a lawyer pressuring you, you know, the mediator's pressuring you, your ex-spouse is pressuring you, oh, well, another 2 weeks or a month in the divorce process that in some cases seems to take forever is not going to change anybody's life. It's the rest of your financial life. So for goodness sakes, do your due diligence and make what is hopefully the right decision.